Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from ChartsandMarkets.com runs down the major markets. He tells us, yes, Virginia, the Santa Claus rally is real. He checks out gold, crude, and the U.S. and Canadian dollars. Veteran trader Victor Adair checks in from Vancouver Island to discuss just how high the Dow could go. He checks in on gold, currencies, bonds, and the wild cards the economy could face in the new year. Publisher of the Leibovit VR newsletters, Mark Leibovit, talks to us from Arizona. He has a very special offer for our listeners. He comments on whether the positive stock markets could continue into the new year, the impact of Geo-Cosmic events like the winter solstice, and what direction he believes the U.S. dollar and crude are going in. We'll talk to Ross Clark right after this.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from ChartsandMarkets.com, where you'll find insightful market commentary and timely technical analysis. Find him on X at Charts by Ross. Welcome back to the show, Ross, and happy Merry Christmas.
Happy Merry Christmas, and we will talk to you before the New Year's over, so, yeah.
Save the champagne.
Yes.
Now, have they been popping some champagne bottles over what's happened with the stock market so far this year?
They have. It's been just a great end of the year. I mean, it was pretty choppy during the middle of the year. Everybody was questioning it. And then, the sell-off in the fall, the classic sell-off into October, and then the recovery. And so we're up 15 or 16% on the U.S., on the S&P from the end of October. And that's the classic rally to be looking for. Everybody's get excited because they say it's so unusual, but it's only because of what we had during the year. They got used to the flat market, but this is very typical. And we are, the Santa Claus rally got a bit of a hiccup on Wednesday, a bad day in the market, but just immediately bounced back. And that's the classic, and that somewhere in that first half of December, you get a pause. And we went 7 consecutive weeks without anything, and then a one-day hiccup. And so at the end of the week, it's 8 weeks on the upside, which is pretty good to see. Some really big excesses that we had on some of the oscillators we look at. Subject then to givings that sell-off on Tuesday, Wednesday. But the classic out of that type of move is that you would then come back, and within 3 weeks you make a new high above the previous one. So this the tail end of the week finished off quite nicely, and pretty much across the board. And even the TSX Venture Exchange has come to life in this last 48 hours. So, there's a bit of good stuff happening out there.
What's going on with gold?
Gold, good life at the tail end of the week. And, we talked about the seasonal move here. Classically, forget about the word classic, Ross, here, you're being too repetitive. And in gold, the move that we look for is an oversold condition in second half of November into December, and then you're going to be having a 42 to 70-day trading rally on the upside. The earliest in the last decade that it has topped out has been the first trading day of January, but typically it's 42 to 70 trading days, and we, as of now, are only at the 30th day. So I think there's lots of potential left here as far as gold is concerned. And, some of the big name stocks have been doing all right. Kinross is at a new, high for the year. Alamos, Wheaton, Barrick, Agnico, all having pretty good moves out of the lows that we had in November. So precious metals looking pretty good, but especially over in the gold market. Poor old silver bulls. They don't have the strong support out there that the gold does. But maybe in time they'll get a bit of a pop.
What's going on in the crude market?
Crude seasonal low seems to be in place nicely. We went down and sprung the low. We had a support area. We took it out and then quickly reversed around. So trading just below $74 at the end of the week, and this is just looks like a perfect seasonal low for the crude oil market. You'd expect it to be a little slow coming off the mark right now, maybe a test of the support area, but overall this one should trend higher, ideally into February, but typically could stretch right out into April, May. So take it a step at a time, but right now it's a comfortable place to be. And I guess the other big item out here has been this move in interest rates. We caught the bottom as far as the bond market was concerned a month and a half ago. It's just been a phenomenal rally. The bonds have gone from 108 up to 125. The yields, the yield has dropped from just over 5% on the 5 and 10 year bonds down to under 4%. So, pretty exciting move, and it's going to be reflected over in some of those mortgage rates that everybody was so scared about. And no question about it, rates are moving up from where they were a couple of years ago for people doing renewals, but not as bad as they were looking just a month or so ago.
What's going on with the U.S. and Canadian dollars?
U.S. dollar has been under pressure, and the Canadian dollar is doing well with the oil market. We always look to see how it does as a commodity currency, and so it was outpacing the oil market and holding up very, very well the previous couple of weeks. And with the crude oil turning, that's being supportive to us. The other thing that's going on is that the interest rate differential between Canada and the U.S. has widened out nicely, which helps bring support. We were at about a 74-point discount to U.S. rates when you look at the 5-year bond differential, and that's backed up to only 57 points now. So that 17-point move in the rates is very supportive for the currency, and I think that you can see that holding in. From a technical perspective, we do have this has run pretty hard in the last couple of weeks on the upside. So we've got some overbought readings on Thursday and Friday. First time we've seen this type of thing since August of 2020. So you got to go back 3.5 years. I think that you're definitely going to see a pause in here on the Canadian dollar, but keep an eye on oil. If it's doing all right and the grain markets are buoyant and they look like they might be basing out in here, then Canada has a chance to put on a bit on the upside.
Ross, thank you so much for the update, and may Santa fill your stockings to the brim.
Ho, ho, ho.
My guest has been Ross Clark from chartsandmarkets.com. Find him on X at Charts by Ross. Coming up, Victor Adair next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Victor Adair, recently retired from nearly 50 years of being in the brokerage business in British Columbia, but still very active in the markets. He's speaking to us from Parksville, which is on Vancouver Island. Welcome back to the show, and best of the season.
Well, Jim, it's a pleasure to be back with you. Thank you.
Victor, stock markets have gone nearly straight up the last couple of months, with the Dow Jones and NASDAQ hitting all-time highs this week. What do you think will happen in the new year?
They'll just keep going.
Yeah. Okay. Well, that's it. That's the end of the show.
I'll tell you, I have been astonished. I mean, the Dow is up over 5,000 points in 8 weeks. I think up until Tuesday of this week, we'd had the Dow up and the other indices as well for 10 consecutive days. It's just like, what do they say? You can't beat it with a stick or something like that. The market has been astonishingly strong. And I speak to some of my buddies of my vintage, and we're all kind of the same view that, this really, really looks like it's overdone, but, go against it at your peril, as they would say in the UK. But, it just does feel as though it's overdone. I mean, on Wednesday of this week, we had the Dow just out of nowhere fall about 500 points in 2 hours. And I was out walking my dog, Barney. I came back in and thought, what happened here? I mean, I'm take a quick look around my news feeds, and that didn't seem to be anything. I thought, what is that all about? And, of course, it had rippled into some other markets as well. The best I can figure, and I do have some pretty good sources of information there, it looks as though, and it makes sense to me, that with the market just up, there were people down on the floors and whatnot, now more on screens than on floors, that have been shorting puts. Now, I don't want to get too fancy on you, but if you buy a put and the market goes down, you make money. If you sell a put and the market goes down, you lose your shirt, because the more the market goes down, it's like your losses start to increase exponentially, and it's wide open. However, when the market is going up, as it has been, and people can sell these puts, short-dated puts, some we've even got options now that expire the same day that they come to life. You just collect the premium, and it's just been like a no-brainer. People have been doing this, and I'm thinking people probably got more and more aggressive with it. Like, I can't believe it. Look at that! Just sell these puts. I get paid every day. I got to do it in bigger size. Now, the thing is, as I just mentioned, the negative convexity there, that's a fancy term, sorry, but it just means that when the market falls, the puts escalate your losses quickly. So I think that had a big chunk to do with it, because by the next day it was like a non-event. The market traded higher and then higher again on Friday. So that, to me, was just a little bit of a sign of the sentiment in the market, that the market's so bullish, or so, let's say it was bullish, that people are willing to aggressively be short puts, knowing it's kind of like musical chairs. If the market starts to come down, you got to get out, you better grab a chair. Well, clearly it didn't happen, and the market had that fast dive. Coming into the new year, I mean, traditionally the first week of January is an up week because new money is coming into the market. People make up their mind what they're going to do with their investments and so on and all that stuff, so new money comes into the market. But I would think that at some point, we're going to get the cage rattle a little bit, and we could have a sell-off. No, I mean, I don't like to make predictions. I just really try to live with what's going on. But certainly one of the things I do like to do is pay attention to not only sentiment, but positioning, and they're usually one and the same thing, although, people can be shooting their mouth off, but what they actually do with their money is a little more important. So I think we've got very, very crowded trades here where, everybody and his brother is long, so that sets up the market for, an imbalance. So, I mean, and those are the kind of things I look for when people are on the wrong side of the market and, have been just assuming that everything's going to work out. So, yeah, coming into the new year, it looks like I would think, the consensus certainly is that the market goes higher and just keeps going higher, and I'd be looking for opportunities to say you're wrong.
Gold prices soared to all-time highs in early December, fell back about $150, but it looks like we could have new all-time highs closing this year. What's driving gold, and do you think it's just going to keep climbing higher?
Yeah, the high we actually made on gold was very interesting. It happened on North American time, on a Sunday afternoon evening, which is probably the thinnest time of the year, of the week, I should say. And prices spiked up that, I don't know, it was up, I think, about $100 or so. I'm forgetting, but I remember seeing it. What is going on? And again, what really caught my attention was it wasn't reflected in other markets. Like if I'd been, doing something on a Sunday afternoon, came in, looked at my screen, and somebody dropped a big bomb somewhere, it would be reflected all across the board. But this was pretty unique to gold, and clearly it didn't last. But what's been happening, the big buyer in the gold market certainly has been the central banks have come back. I mean, there was a time, I think years ago, probably more than 20 years ago, the Bank of Canada sold the last gold that they had. The Americans have not been sellers, but other central banks have been sellers of gold. I think the Bank of England actually sort of timed the low back in the late 1990s, selling gold right at the bottom of the market, $200, $250. When I say central banks, however, these days that means China and Russia are the big buyers. And China and Russia also happen to be the world's two largest producers of gold. So, and I always smile about this, that people that, are perennially bullish on gold usually have kind of a, let's call it a Republican persuasion as opposed to a Democrat persuasion. And I wonder if they think through sometimes and realize that two autocratic communist countries are supporting the gold market in their favor. Like, what do they say, strange bedfellows, that sort of thing. But one way of looking at it is like Saudi Arabia, say, reduces the amount of oil they pump out of the ground or distribute to their customers around the world in an effort to support the price. There's that. Well, effectively, you can imagine the central banks of China and Russia are taking gold that's being produced in their country off the market, not letting it out into the world market, acts as a support for the price. And, I just have to wonder if the people that are mining this stuff get paid a fair price, but, who knows? But I would guess they're probably getting a little less than, they would if they could sell it in the open market. Anyway, central banks have been an important factor. The gold, certainly over the last few years, has been very negatively correlated with the U.S. dollar and with real interest rates. The real interest rate thing seems to have broken down lately, and it may just be that if it wasn't for the central banks, we would be, again, Russia and China, gold prices would be a lot lower. If you're bearish the U.S. dollar, and a lot of people are, they'll say, it's not worth the paper it's printed on. And I'd say, well, if you think that way, neither is the yen or the Swiss franc or the Canadian dollar or the euro or whatever. But in the currency game, it's just relative, one not worth the paper it's printed on currency against another one. But if the U.S. dollar is falling against other currencies, then that's probably going to be a good thing for gold as we go forward. If the market has an all-time high close at the end of this year, and it looks like we could easily do that, just a few more days away, that could trigger some bullish signals in different long-term models. I know Martin Armstrong, for instance, pays a lot of attention to like a new high at the end of a year. I saw a couple of comments lately about how the junior gold mining companies have just been beat up and left for dead, and that if we got any kind of buoyancy in the gold market, that they could come back to life. So there'd be something to look at there. Anyway, those are. I don't know where it's going. I don't have an opinion. Don't have a trade on right now. But I'll just be. Also, it's this time of the year. I'm kind of withdrawn from the market and mostly just watching. But anyway, I don't have a real big hard opinion about gold.
What's your outlook on currencies?
Currencies. Well, let's start with the big one, I guess, really, the Japanese yen. Japanese yen hit a 32-year low here a couple of months ago, or 6 weeks ago, whatever it was. The Bank of Japan has still got negative interest rates in Japan, like nowhere else in the world that I can think of other than maybe Switzerland, certainly if you just want to put money in a bank deposit over there. But yeah, the Bank of Japan has been very slow to change their monetary policy, like to follow other banks, and people keep thinking, that they will one of these days, and we call that the widowmaker trade, when you keep putting some money on the Bank of Japan doing something, and they don't, and so you lose. So the Japanese yen down 50% from where it was in 2011, 2012, when then Premier Abe had his program to try to stimulate the economy. At some point, the yen is going to go up, but really, of the major currencies in the world, it has been by far and away the weakest. On the other side, the Swiss franc has been the strongest, and Swiss just this past week went to a new all-time record high against the euro. It's a 12-year high against the U.S. dollar. When I see the Swiss franc rising against the euro, I always think that's a barometer of stress. Now, interestingly, we were just talking about gold. Gold's up and the Swiss franc is up. That kind of feels like an environment where people that have money and are uneasy about the future get into gold, get into Swiss francs. So now, if you are a real, call it a player, or you're an adventurer in the markets, if you wanted to put on a trade that might really pay off in a big way, you might say, I'm going to buy the Japanese yen, which is the runt of the litter, as it were, and sell the Swiss franc and look for a convergence, because the spread between the two of them has basically never been wider for years and years. That's a tough trade. I'm not recommending it. I'm just saying, that's a way of thinking as to what's out there. The euro, I keep noting, I call it the anti-dollar, and I didn't invent that term, but I like it because if people want to be trading in currencies and they don't like the U.S. dollar, sort of the first place you go would be the euro. The volume of trading between the U.S. dollar and the euro is greater than probably the trading of all the rest of the foreign exchange market put together. So if you don't like the dollar, you buy the euro, the anti-dollar. The euro has gained against the U.S. dollar the past couple of months, since October, I guess. Part of the thinking there is, look, the Federal Reserve is not going to be as tough as they were, so that won't support the U.S. dollar, so I want to get short the U.S. dollar. What's the first thing I'm going to do? I go and buy the euro. Okay, so that got us to here. I think that going forward, I see the European economy much weaker than America, if that means anything. But I would think that the European Central Bank would probably cut interest rates before the Americans, unless the American Central Bank is really, really, really motivated by politics. In other words, do whatever you have to do to keep Trump out of office. Then that's a whole different way of looking at things. So I wouldn't be particularly bullish of the euro. I kind of like the U.S. dollar for my old background reason. The money just keeps coming to North America for safety and opportunity, and I'm inclined to think that 2024 could be a time when people might be looking for safety. I think there's lots of possible upsets in the year ahead that would put a bid in the U.S. dollar. And I guess while we're here, Canada, where was it? About a couple of weeks ago, make that maybe 5 weeks or so ago, Canada was at a 12-month low. The Canada, of course, if the U.S. dollar is strong, Canada is generally weak, and vice versa. Canada's rallied from about 72 cents to 75.5 cents here in the past few weeks. That's about a 12-month high on Canada. I have written in my blog a few times here, back at the lows, the speculative short position in Canada was the biggest it had been in, I'm going to say, 6 or 7 years. In other words, speculators, and when I say speculators, I mean net positioning. Some people are long, some people are short. But on the net side, this very large bet on Canada to go down. And when it doesn't go down, like the last couple of weeks, the last several weeks here, those people are wrong, may get their feet held to the fire, and they got to buy to get out. So that kind of accelerates the buying. And I think that has accounted for probably a chunk of the move that we've had up here, certainly in the last couple of weeks. So, and we're getting into the end of the year in the currency markets, particularly. People kind of batten down the hatches, but then we can come out into January, and people have to start putting their positions back on. Over the years, I've seen a lot of changes in direction in the currency markets around the end of the year. So we may see that as we get into January.
2 months ago, bond yields were at 16-year highs at around 5%. Now they're below 4%. What happened to create such a dramatic change, and will interest rates keep falling next year?
Yeah, I mean, bond yields got to those 16-year highs, and there was profound negativity. Now, let's just put that in perspective. That was in October. Bond yields hit like the lowest level ever in the summer of 2020, when we had the yield on the 10-year 10-year Treasury was yielding half of 1%. Now, in October, it's yielding 5%. So the yields went up, certainly as the central bank was raising interest rates. But let's say in September and October of last year, some of the talk to justify why the yields were where they were, like they had really gone up, people would be talking about, and me too, you look in the future, it looks as though Western governments just don't care about balancing the budget anymore. That's just like so yesterday. So you just continue to print whatever money you need to fund the programs that you told people, you do if you got elected, and there you go. So the deficits continue with interest rates higher. Servicing the outstanding debt gets bigger, and you could just, paint a vicious circle of the debt level going higher and higher, the amount of debt going higher and higher, and it just sort of spirals out of control. Well, at the lows there, or in terms of yield at the highs, the market had become really overdone. So now we're having a correction, and the sentiment has swung like 180 degrees. We're all in love with the central banks. Inflation's down to practically nothing, and so blah 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 blah. The bullish arguments on bonds. I'm definitely from Missouri on that one. I think some of the arguments that were made to explain why yields were as high as they were in September and October, if anything, are stronger now. And certainly positioning and sentiment is very bullish on the bond market. So to me, it's vulnerable to a change. So when you say, will interest rates keep falling? I mean, in terms of bond yields, I read a lot of different people, and there's some very bright people, as usual, on both sides of the argument. Some people are seeing, we can easily get down to 3.5% or lower in yields, and other people think maybe within a year we'll see yields back above 5%, although those folks are clearly in the minority. It's a crowded trade to be bullish bonds, and yet the market, as markets often do, can go further than makes any sense to you, or, what do they say, the market can remain irrational far longer than you can remain solvent. So from a trading point of view, you can't bet against it. Try to pick your spots or go with the trend. But bottom line, not to beat around the bush, I think that the prospect of much lower bond yields is unlikely unless, we have a sort of a nasty kind of recession, and that would drive yields lower.
Your weekly trading desk notes at Adair.ca have a section called On My Radar. Well, one ping and one ping only What's on your radar for 2024?
Was that Sean Connery from The Hunt for Red October?
That's right, Vasily.
Well, we've got elections all over the world, and starting in Taiwan. And not to pretend I'm a political analyst, but I think what you've got there in Taiwan is one side says never to China in terms of unification, and the other side says, well, we should get along better and just do more trade and so on. So we'll see who wins that one. Of course, the big election for a lot of people around the world is the American presidential election. Right now, it looks like Trump would win if the election was held right now. But that's, what do we call it? It's about 11 months away, I guess, and that's a lifetime in the world of politics. But a lot of elections around the world. It seems immigration or migration, depending on what you want to call it, in different places around the world, not only on the American southern border, but very much so in Europe, has pushed people maybe a little more to the right, than they would be otherwise, and that might have a change. But anyway, there's going to be a lot of elections that could shake things up. We've still got sort of two very active wars in Israel and Ukraine. The prospect of either of those widening, I mean, the action in the Red Sea, in a way, is a widening of the war in Israel, and that has always been the wild card there, if that war would get wider. Ukraine, with the Americans in particular not delivering funding, maybe even not as committed, clearly not as committed to supporting, that is, some Americans supporting Ukraine as they used to be. Europeans seem to struggle to create support, I should say, Ukraine. Something could play out either way there, and ultimately, I think whatever happens in Ukraine is probably a negative for the euro currency. There's an old saying in the markets that fear moves markets faster than greed, and I kind of alluded to this a few minutes ago. That I just have this sense, and I've been trading markets for 50 years, so you get a sense, and a lot of times it's wrong, but whatever, that we're setting up for some dramatic moves that probably would be fear-induced, and I don't mean apocalyptic, but just where people go, oh my God, that's really, I didn't see that coming. So, and then the last thing I'd say, Jimmy, is, again, like I said moments ago, sentiment and positioning are way more important to me than forecasts. I mean, it seems a lot of analysts feel obliged to offer your 12-month look-ahead forecast this time of the year. And everybody, including the people that are making them, know that these forecasts are usually look really silly when you look at them months later, because there's so many things coming along that you didn't expect. But in terms of that sentiment and positioning, it seems it's almost like a what me worry or what could possibly go wrong kind of sentiment out there. We're on a roller coaster, particularly for the more affluent among us who are benefiting from rising asset prices and real estate and the stock market, and life's great. Whereas people that are way less affluent, or let's say not affluent at all, are maybe struggling and not all that inclined to just brush things off. Anyway, I'm rambling a little bit. I just think we need to be prepared for things to be, our cage to be rattled a bit, and so yeah, I think that's probably a fairly safe guess as to what may happen over the next several months.
Victor, may Santa give you and your family everything you want, just a little bit more.
Jimmy, thank you for that. Best wishes to you and your family for a good Christmas, and to all our listeners, and I'll look forward to talking to you the next time we get together.
My guest has been Victor Adair, recently retired from nearly 50 years of being in the brokerage business. Check out his website, victoradair.ca. Coming up, Mark Leibovit, next on This Week in Money.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRtrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark, and best of the season.
Yes, best of the season. Merry Christmas and Happy New Year to all our listeners.
Do you have a special offer for our listeners?
Yeah, let's do a same special for the holidays for those who'd like to subscribe to VR Trader, VRtrader.com. You go to our website, and when you enter a newsletter order, there's a promo code slot, and please use 2022 half off, just as it sounds, 2022 HALFOFF, and you get 50% off of any of our newsletters.
Yeah, that would be a great stocking stuffer for somebody.
Right. I also want to disclose I'm not a financial advisor, nor do I provide financial advice. Did that years ago, but I'm just a newsletter writer now.
And it's sometimes great news, like the current Santa Claus rally. What's the story there, Mark?
Well, there's nothing surprising about it. I mean, we talk about it all year. There are a couple times where it doesn't happen. I mean, nothing is perfect, but it's set up this year, and it tied right into the winter solstice. I've been talking about that a little bit, how I, track seasonal patterns and cycles as well as the traditional patterns and volume and all the other technical indicators. But, we had the each of the seasonal patterns come in March. The vernal equinox, for example, is the next big one coming up, where the market often has a low point. We've seen that many times. Again, nothing is perfect, and the market's been rallying into the right into the winter solstice. So, that suggests to me that we're probably hitting some type of top here. I mean, the Santa Claus rally, technically, according to many people who do the statistics on it, it still isn't over. It could rally right after Christmas into the first couple of days of January. So you can also say, well, we've already had the big rally and it's going to end here. So we're in that nebulous time frame about how that pattern will play out. But look at the rally we've had already since the October lows. So, I wouldn't get greedy. I mean, if you're a trader, take it accordingly. But I'm a little concerned coming into January. I mean, some profit taking may occur, a lot of window dressing occurring here on the part of money managers where, if you don't own certain stocks that are running, you want to dress up your portfolio to make your portfolio look better by the end of the year. So, you might still see some more buying next week, and we'll just see how it all plays out. Again, I'm not surprised at all. We talked about it. We had a forecast model that said we could rally here toward the end of the year. So you just trade them as you see them, so to speak.
The Dow's now in new high territory. Could we be on the way to a 50,000 Dow in 2024 or 25?
Well, that's a long way out. Anything is possible. And, I'm more inclined to think, over time, yes, but whether it be 24, 25 or 2030 or some later date, I mean, that's the big picture comment. I mean, if you're a long-term investor, I mean, look at the history of the Dow over the last 100 or so years. I mean, despite the big sell-offs, ultimately it comes back. You have government intervention, inflation, manipulation, so it tends to overall trend higher. I mean, after the crash in 1987, most people thought it was all over. It was like the Great Depression mentality everywhere, and it took years for us to recover, but ultimately we did. And it just funny because at the time I was bearish and put out a forecast to watch out for October. This sort of dates me, of course, but we put out a forecast in January of 1987 to watch out for October. But the answer is probably yes overall. I don't know, 24, 25, anything is possible. I don't know about 50,000. That's a pretty big number, but, more than likely, that's coming over time. And if you're young and you're investing for the long term, and you're in indexes, you probably should just plan on that. If you're elderly, if you're in your 70s or 80s, you're getting up there. Time obviously has worked against you unless you're going to live to 120 the way Moses did in the Old Testament. Then I guess you have nothing to worry about.
Well, about Methuselah.
Oh yeah.
There's a guy who lived a while.
Oh yeah, if you got 800 or 900 years, my answer is yes.
When big markets break out, do they tend to run higher for a while?
Yeah, just like they tend to run lower when they break to new lows. It just, momentum in that general direction. Right now, bullish sentiment is really high. You mentioned whether the Dow is into new highs. Well, the mid-cap 400, the Russell 2000, other measures of the market are not into new highs. So the tape has been painted a little bit because of, it's only 30 stocks in the Dow. Not all indexes are into new highs, but it's sort of irrelevant. Depends what stocks you're in. I mean, for a lot of statistics this past year, we talked about this in previous interviews. If you follow the Russell 3000, not the 2000, which is about 98% of all the stocks, there are a lot of stocks that were down for the year. I still think there's some number 20 to 30% are still negative for the year, despite the big showing on the indexes and the Magnificent Seven. The big 7 stocks that everybody loves. So, besides those, how should I say, there's some tax law selling actually occurring, where the losers for the year, have put a little pressure on the indexes a little bit where they wouldn't had before. But if you owned Apple, Google, Meta, Microsoft, Netflix, NVIDIA, or Tesla, the big 7, you're happy for the year. And, maybe that'll continue into next year too. We really have to watch the action come January. And one of the things I watch and is inspired by my old friend who passed away the last couple of years, Yale Hirsch, who publishes the Stock Trader's Almanac. I think it was 1972. He created or published the notion of the January barometer. And that says that the first 5 days of the year, if they're up compared to the December close, 5 days prior, and or if the month of January is up compared to the December close, I think he's referring to the S&P 500, you tend to, see a positive year. Not to say every day is going to be up or you won't get big moves up and down. So the January barometer this year, we talked about this, this past February, said we will be up because the first 5 days are up net and confirmed by the month as a whole up compared to December. So we have to watch the early few days of January. And again, nothing is, carved in stone here. It doesn't have 100% accuracy, but more so than not. So I think that'll be the first indication of whether 2024, will be positive or not. And, Yale created this. So, something that we watch over time. And it should be interesting. But, like Jim Cramer says on CNBC, I have to give him credit. I don't give him credit for everything, but, he has that expression, there's a bull market somewhere and we'll find it. And, there was, selective bull markets, and even in the worst of times, whether it's a Bitcoin or whether it's gold, silver, whether it's copper, or cannabis stocks, or, something is moving, so there's always an opportunity no matter what 2024 unfolds here. And, if there's more war, then you're going to see the defense stocks, take on a greater play. And, if we have to rebuild Ukraine, let's talk about, the infrastructure stocks like Vulcan Materials and Martin Marietta Materials and companies like that might get a lot of business for that type of activity. So, there's always a bull market somewhere. There are stocks that we find, there's always, we saw oil, for example, which everybody was negative on. The oil stocks took off here in the last several weeks, except for a little pullback. We're stronger than people had expected. So, and then look what's going on now. You got the Red Sea being attacked, where ships are being attacked and ships have to be rerouted. And, that's affected business and oil and all kinds of fun stuff. So there's always opportunity out there. So, there are many times over the last, several decades where I say, well, will the stock market provide an opportunity to profit and, help provide for your retirement and trading desires? And the answer is yes. There's always something going on. It's really fascinating. But yeah, I'm long-winded response. 50,000, just a number in the Dow. It could be 100,000 in the next several decades. Who knows how much they're going to push up these stocks? And they also, I'm getting a little wordy here. The Dow, again, is only 30 stocks, but it's not the same 30 stocks all the time. The powers that be always remove names and put in other names that they think are going to help the Dow along. If a stock is not doing well, they'll tend to pull it out of the Dow and replace it with some high flyer. And what I'm saying is it's manipulated. I mean, they put Apple Computer in there, and they start putting more volatile names into it. Sometimes it hurts or it helps. It helps depend on where that stock is. But if we had the original Dow from decades ago, the Dow wouldn't be anywhere near where it is now. I mean, names like International Harvester and Eastman Kodak and things that are, so the names are just not there anymore. And if they were, the Dow would be a fraction of where it is right now. So they play with it. I mean, it's not a legitimate index. I hate to say the word illegitimate, but it's manipulated. You keep sticking stocks. Oh, that's a good name. It's hot. Let's stick that in there and take out one that's not moving or doing as well. So that's a whole other discussion with the way that index is even created. But that's the story.
Is near unanimous bullishness an important market indicator?
Sure is. Just like unanimous bearishness would be a important market indicator. Too many bulls out there. Everybody is just too optimistic. Just for my own, suit. I mean, my question is, who's watching the Chicken House? We have Iceland event the last couple of weeks. I mean, that's a huge event. With volcanic activity, we can get into more of that later, what that could affect on the planet. And, of course, the Red Sea incident with the ships, I just mentioned it. There's political corruption going on all over the place, like this recent vote in Colorado against Donald Trump, so to speak. You got Hamas, Israel, what's really going to happen over there, what's happened with Putin and Ukraine, and my real question is, where is the next outlier event? We always have outlier events, and suddenly they just come out of nowhere. They pull the rug from underneath you. Earlier this year, you had the banking crisis, and the market sells off as the fear was that banks were going to collapse. And, of course, the regional banks had a huge sell-off because many got caught with the interest rate phenomenon where banks had portfolio and they had bonds, long-term bonds at very low rates. They were locked in, and now they got huge portfolio losses because the real portfolio value had dropped considerably. And, the Silicon Valley Bank disaster was part and parcel to that event. So there's just things that come up. We had COVID a couple of years ago. There's always something, out of the blue that nobody expects. And when you turn on financial television and read the papers, it's like unanimous discussion, what the Fed is going to do. Look at what's happening with interest rates right now. Like the whole world, the whole stock market, everything depends on whether rates are going to come down. And, of course, we've had a little rally in the bond market here, which could have been a manipulation. The Fed has not officially done anything. But the whole discussion regarding that, and then we've got China out there. North Korea set up a missile in the last couple of weeks. There was threat of it, one of it being a nuclear test. So many quote unquote outlier events, could hit that suddenly just changes everything. And I just don't like to be a perennial bull about stuff. You got to watch what's happening around you. And when I see everybody's focusing on one story, it sort of worries me a bit. But we are traders, and we'll try to flow with what's happening. So right now, you got to be careful. There's just a lot of bulls here, absolutely convinced that things are great. Fed's going to cooperate with what the bond market is telling us. It's been rallying, which drives interest rates down. So it's the old expression, as the tail wagging the dog. The free market interest rates have declined, but the Fed hasn't done anything but The assumption is the Fed will follow, or who knows, maybe the Fed's manipulating that market as well. So it's we have an election coming up this coming year. The consequences of that are always uncertain, but generally a sitting president, the market tends to do better during that year because of his influence on spending and political pressure on institutions like the Federal Reserve and so forth. So it should be a definitely interesting year for trading purposes. And my gut feeling overall is you'll probably see some type of correction in the first quarter of this year, whether it starts right away or you see it in February and March. Then we'll evaluate that and see where we're going.
What do you think the real rate of inflation is?
I really don't know. We have to talk to some of the alternate economists out there. There's one famous one, John Williams, who does his own analysis. All I can tell you, I don't do these studies on the actual interest rate, but I can tell you whatever you're being told by the government, you can disbelieve right off the top. You can't believe any government reports, financial reports. And again, this is my criticism of the financial press in total. If I'm not invited on CNBC, I used to be many years ago in places like that, BNN. Basically, I would say, why are you guys believing what the government is telling you? Why do you believe these numbers? We know that many of them are false or manipulated. There's political pressure or miscalculation, and they've already played with financial numbers a long time. Right after the financial crisis in 2007, 8, 9, they changed the basis, the way banks can value their portfolio to the benefit of saving the banks, and they broke economic and accounting rules to do that. So my real feeling is when you get a report, I think it's the ISM report that comes out, industrial, the report that comes out of Chicago every few months that gives you what the industry itself is saying about I think it's the manufacturing, ISM manufacturing index. This is generated by the private sector, and I tend to believe those more, and those were showing a little negative reading the last I saw it. I believe those more than I believe the government reports. So where the financial press reports them and they're just like a mouthpiece for the government reports, I would say you better look at those very, very skeptically because over time, they are manipulated and they're created for a reason the government sees to their benefit. So what the inflation is right now, well, I would say whatever officially you're being told is probably not true. We know, for example, the consumer price index doesn't include energy or food. So how can you have an inflation index, CPI, come out and not include two items which vary widely in their impact on people? And it's a false index. And, people report it, and I don't see any reporters saying, well, I'm going to report the consumer price index to you, but really is a false index because it really doesn't report what's really happening. Nobody says that. They just regurgitate it, and there should be an alternate real CPI created, and that should be reported, which would include things that affect people like food and energy. So I hate to use the word fraud, but, it really gets down to that. It's a fraudulent reporting system.
In times of high inflation, are stock markets a good place to be?
Absolutely. There's a lot of volatility. Inflation actually tends to be good for stocks. And that's the best answer I can give you, yes.
Is the Fed likely to continue pausing on interest rate hikes?
It appears so for, political reasons, the action of the bond market. It seems that the tail's wagging the dog, as I mentioned a few moments ago. It seems that's what they're being told to do, either by the private sector or by higher ups. Telling Chairman Powell, hey, it's an election year, do what you have to do.
Interest rates have zoomed higher in the past year and a half. Are you surprised these higher rates have not yet led to a housing collapse?
I'm not surprised at all because there was no reason for a housing collapse. You had shortages of houses. A lot of construction has been on hold for a long time and delayed. Ever since COVID, supply chain issues. There's just shortage of product. The high interest rates actually, may have slowed new buyers that had to finance, but there are a lot of cash buyers out, believe it or not, are still able to buy houses. There's still hot markets out there doing well. Arizona here is one. There are other places that, have been doing well as well. So, there's not enough product out there. Many younger people are looking to get into housing, and a lot of the contractors have been offering special deals and reduced rates, even though the official rates are much higher. I'm bullish and have been bullish on real estate. Plus, I see it as an alternate place to have money. I'm just personally don't trust the banks. I don't think all money should be in banks or in the stock market or in treasury securities or in gold or any one thing. And real estate over time is a good hedge for your money. There was a statistic that actually came out the last few days about the wealth of the most Americans are in their homes, and particularly the older generation, the retired generation, which is the category I'm in, I suppose. The baby boomers, I think, which stretches from the mid 1940s to the early 1960s. That group of boomers have seen tremendous appreciation in their homes. I mean, homes that used to be $30,000 are now $500,000 or $1 million, depending on where you're located. I've heard some $30,000 houses are worth multi-millions, depending on where you are. I know one example in particular that I was familiar with were houses in Coronado Island in California, right out of San Diego. They were worth about $30,000, in the 1950s, and now are worth millions. So, a lot of the wealth has been created in real estate, and many of the retirees have their homes as a major asset and have seen appreciation. So I'm overall bull. I think there's a general rule that real estate doubles every 20 years. So I remain positive. I think you'll see, particularly if rates really do come down and the Fed reacts, as everybody appears they're going to. And for investment reasons, I see, continued appreciation in real estate, at least for a couple more years here.
Does gold perform best in times of high inflation or deflation?
It's a funny thing with gold. Gold will move with the markets more than people think. I remember in 1987 when we had the crash, and other cycles, even during the 2008 sell-off, gold went down because people needed to liquidate assets to pay margin debt or needed money, and they had to sell their gold. So gold, can move just with the regular markets, not necessarily independent of markets, though it can on occasion. So it's a long-term hedge. It's tradable like any other commodity or stock. Inflation is a factor, but it's more a factor related to currencies. I think gold's base argument to be bullish is the depreciation of currencies and the fact that governments overspend and mismanage themselves, and over time currencies tend to depreciate in value. You can look at the U.S. dollar, it's down 98% since Federal Reserve came into power in 1913. The British pound way down off its highs. So the fact that currencies, government mismanagement is the real argument for gold. So it's not so much inflation, deflation, it has to do with currency. So if the dollar continues to decline, which it has started a decline here in the last few weeks, assuming that continues, that's going to be even more of a bullish factor for gold. And we have to remember, too, everybody thinks I'm a conspiracy theorist, but gold is manipulated. There's dozens of instances and records that you can check with Adair.Org, which is the organization that tracks these stories. And, gold has been manipulated, managed over the decades for government purposes. I guess the best expression, suppressed in value intentionally using the COMEX, the commodity exchange, where futures contracts were used to manipulate the price. There's actually court actions. You can read about them at the Adair.org website or on news stories that I put out, lawsuits against some of the big banks that worked apparently with the government to hit bids on the COMEX to depress the price of gold and silver. So over manipulation, unfortunately, has been a big problem there. Of course, we know that's a factor in all the markets too. So that's just another, another sore point here. Gold should be a lot higher than where it is. I mean, on an inflation-adjusted basis, it should be probably 2 or 3 times higher than where it is, but potentially at press. But we know at the same time, Russia and China, much of the world is out there accumulating gold, and for real reasons. Again, it's like a hedge against currencies and governments' mismanagement. So I'm a bull overall, but it's like anything else. We've seen, big swings in it, and you have to be prepared for those. I mean, I would remain bullish, but just look what happened recently here. I mean, it broke out because I'm pricing in U.S. dollars. 2080 area was sort of resistance. We shot all the way up to 2154, which is decisive breakout, and then it collapses and goes back all the way back under 2000 into the high 1900s, and now it's trading around 2050. So huge volatility. I mean, it's just something you got to be used to in a manipulated market. So it's eventually the manipulation hopefully will end, and it'll adjust to its real historical value, and which has been proven over thousands of years as a hedge against currencies and other forms of investment.
Bull or bear on the U.S. dollar?
I'm bearish short term. The chart's topped out here. I mean, I'm watching like everyone else. It just started to pull back here. It helped the precious metals. It helped commodity prices, copper and other base metals, for example, or some of those stocks are rallying. So I don't know how the dollar could be strong with the mismanagement and of our government finances. I mean, the continued congressional willingness to spend like drunken sailors, an inept financial institution like the Federal Reserve, which should be abolished. No question is asked of that of any reporter on television when they interview some of the big politicians or the members of the Federal Reserve. Should be abolished because it's mismanagement. Classic examples, the last 10 years where they kept interest rates at 0 and suddenly jack it up to 5% over a very short period of time. I mean, just didn't know what they're doing. They don't know what they're doing. The history of the Federal Reserve, even Ben Bernanke, and I mentioned this many times, was quoted back in 2008, I believe, about, yes, we caused it. I mean, taking credit for the fact that they raised interest rates during the Great Depression and helped precipitate a worse depression because of their actions. Why an institution like this continues to exist or be allowed to exist is beyond my understanding. The free market should determine interest rates, not some institution. It's like saying the federal government creates an institution that controls the stock market, which they may be doing anyway with the plunge protection team, but they're not talking about it. Supposedly we're supposed to have a free market, changing prices, and it should, as it's now apparently doing in the Treasury bonds, as we're seeing that rally underway. So that's my response.
Bull or bearish on crude oil?
Oh, I'm a big bull on crude oil over time. I'm following Warren Buffett on this one a lot because he's pretty smart, and unfortunately we lost Charlie Munger here the last few weeks, but his partner. But they're big accumulators of Occidental Petroleum, and I don't think someone who's as smart as that person. By the way, he's in a huge cash position, Warren Buffett. He has one for Berkshire Hathaway. It's been in the news. This is no great revelation. I think he's one of the highest cash positions he's been, like almost $200 billion, meaning that he didn't believe too much about the rally in the stock market this past year. Yet Berkshire Hathaway stock is still doing okay. So, but he's a big buyer of an oil, Occidental. And, I think over time, just world demand, the realization that, EVs are not selling so fast. Many people want hybrids now, because they want to back up to energy that will only depend on electrical availability of these things, the cost of the EV, and so forth, and just world demand for crude oil, and not only for driving cars, for every product you can imagine. There'll be a time perhaps we'll need less of it, but with what's going on in the world geopolitically, I think you have to be overall positive on oil. So I'm a bull.
Winter solstice, a full moon, the markets, what are you watching on the Geo-Cosmic front?
I already mentioned it. Yeah, we're running right into the Santa Claus rally, right into the winter solstice. which should be sort of a change of direction time frame. We're right at the full moon, which is on the 26th, and we should be at or near a top here. That's sort of the way I'm reading it. You like to get confirmation on the tape. You like to see reversal. We had that sharp reversal a couple of days ago where the Dow dropped 500 points and everybody's scratching their head. But that was an early warning, in my opinion. And we're in a toppy area here, short term. That's my opinion. Now, I'm not making any long term projections here, but that's sort of where I'm at. I think you should be looking to lighten up here into the end of the year, and hopefully the last couple of days are strong for that purpose, and we'll take it from there.
Are you seeing any possible black swan events?
Well, this is what we talked about earlier, outlier events. What are they? They're coming. Is it an Icelandic volcano that of a magnitude of like the year 536? I don't know if we've talked about this before. We've talked about it off air too, but that was the worst year to be alive because the geologists who've studied that event say it was an Icelandic volcano. Of course, we've seen Iceland do a lot of stuff in the last 10 years, with the big volcano and affecting air traffic across the Atlantic and so forth. Iceland might be the sore point on the planet in a way that, we had Krakatoa back in the late 1800s, and we had, dust cloud around the planet that affected, crops and all kinds of stuff for I think 2 or 3 years following that. The Icelandic volcano I'm referring to in the year 536 was so bad that, the whole earth was covered with dust, and it was an endless winter. And when I hear the volcanoes going off in Iceland based on what happened, of course it was 1,500 years ago. That's short term in geologic history. For us, it seems like never could happen, but we still see these events. So, I'm just wondering what the next outlier event is. Is it another COVID? Is it a financial crisis? Are the banks really solvent like everybody says they are, and everybody's joyful that all the problems are behind this? Some analysts believe that's not the case. The banks still have issues. We have North Korea sending out a missile the other day. Japan got excited about that. Could have been an atomic test, which didn't occur, but that's a risk. Ukraine is still behind us. China, Taiwan is still behind us. Not to mention what's going on with Hamas and Israel. Not to mention what outcome we'll have in the next presidential election. So, tsunami, asteroid, polar shifts. I mean, we could talk about anything out there that's not being covered in the news, which seems to only focus, as I mentioned, a few minutes ago, about the Federal Reserve. Seems to be the only thing people seem to be worried about. There are other things that are life-changing and planet-changing, which are important to me that I monitor. So let's see what happens. But yeah, we can scratch our head. Where is the next outlier event that's suddenly going to change things dramatically? And we've seen so many recently. Some affect the markets immediately and some don't. Some are ignored, but eventually we have to pay the piper for. So let's see what happens. It's just interesting as an observer in how this is all going to unfold. But don't get too cocky about any one investment or any one market. Magnificent Seven or the big hot stocks, that's not going to last forever. Gold's not going to last forever. Stock market to new highs, Dow making new highs. Everything changes. You just have to be prepared to adjust your thinking and act responsibly. Lightening up when stocks go up, reducing your position is a good idea. You can't get greed taking over your investment process. Things do adjust, and you need to adjust your thoughts accordingly. So if you got a big profit in something's run, everybody's all excited about it, and there's unanimous opinion, you got to understand that is just the opposite thing you should be doing. And that's been my life experience. You may not catch the top, but you'll avoid the big crashes.
What effect has the Israel-Hamas conflict had on markets so far, and how could it affect markets going ahead?
Well, so far, it's affected the Red Sea on the shipping scale, where ships are being attacked and have to be rerouted. That's a result of the Hamas-Israeli war. Those are the group that's defending Hamas, is acting to try to make their statement about what's going on there. It has real world effect, and it's nowhere being solved. And I don't want to make any political comments here. I don't want to offend anybody listening, but, the effects of that, war are far from being solved. And, yes, I would say Hamas has to be eliminated. But beyond that, any type of war is a disruption. We don't know how far it could extend. And someone makes a mistake and does something they shouldn't do or push the wrong button, things could get out of hand very quickly in any event. So it's definitely, it's not over. And we just have to see how the powers that be play out. So again, I have my own opinions about where things should go, but I'm trying to keep this more to a financial discussion than getting into the political comments about it. But I still feel that it's definitely going to has had its impact, may continue, and it may escalate, because you get just the other day, United Nations comes out and wants to condemn Israel and blame Israel for everything, as they've done for decades, when it wasn't Israel's fault. And it just the anti-Semitism issue is huge. And these things haven't been solved, and these continue. It's going to have its impact. So, just from a economic point of view, obviously, war is going to have its impacts both on military needs, prices of oil, inflation results, and a lot of discord on the planet. So let's see how it all plays out. It's one of many factors we have to look at this year.
Is the Russia-Ukraine conflict responsible for a lot of the inflation due to countries sending Ukraine piles of money as part of a massive money laundering operation? And do you think this will likely continue?
Yes, unfortunately. What did Eisenhower say? Watch out for the military-industrial complex. And that's been the case. It seems like our country has to be involved in wars, in armament production, forever. It just doesn't seem to change. Congress doesn't seem to be, and Joe Biden doesn't seem to be inclined to stop spending money and sending arms over there, which I've read also depletes our own military stockpiles of equipment and reserves that we need. It's just incredible. Unfortunately, it's driven by the dollar. Money is being made because of this event, and it's unfortunate. So we can't control what happens everywhere in the world. The U.S. can't be everywhere, and any country who wants to take over another country, maybe it's their own business to a certain degree. I'm not an isolationist, but at some point you wonder whether we need to have more of that viewpoint. And the war really started, from what I understand. Putin had warned ahead of time. He didn't want NATO at his doorsteps. He didn't want nuclear weapons at his doorsteps. And he had warned ahead of time. And if we had some intelligent discussion about Ukraine being neutral and not being part of NATO, this whole event may not have occurred. And unfortunately, the powers that be in NATO and in the West, just have this anti-Putin Russian attitude that they want to take out Russia, and it's not going to happen. And unfortunately, that's what created, I believe, this event. It's common sense in politics could have avoided the whole situation, and unfortunately, it didn't happen. So anyway, a lot of short-sighted people. They're running our governments, particularly in Europe, and that's, I think, the basis for this.
Since President Trump rode down the Trump Tower escalator in 2015, a lot of crime, corruption, and evil has been exposed. By taking Trump off the ballot in Colorado, is even more corruption being exposed that could turn the state red?
Yeah, well, unfortunately, there was some ruling that came out today. The Supreme Court delayed making a judgment on the Colorado situation, and I don't have all the details at this recording. I don't know if the Supreme Court here in the U.S. is going to actually stand aside completely on the issue and let Colorado's decision hold, or whether it'll be appealed, and whether it'll eventually change the Colorado ruling. There's no question about it. Just powers that be, don't like Trump because he opened up a lot of the illegal activity and corruption in the deep state and the secret government, and they don't like it, and they want to stop it. And they figure by keeping him out of power, their power is preserved. So the Democrats are scared stiff of losing the election next year to Trump, and that's what it's all about. And rightfully so, they should be, because they are corrupt. But that's my opinion. I mean, look, any government, we're getting into political comments now, but the Biden administration, any government that would keep our borders open like we have in Mexico. I mean, my great-grandparents or grandparents, came across, and they had to go through Ellis Island and be processed and scrutinized before entering the U.S., and it was a one-by-one analysis. And here, opening the borders and letting thousands or millions of people run across is illegal. And who's responsible for that? It's the Democrats in the United States, who I view the democratic institution as a criminal institution for allowing this to happen. So what can I tell you? I have to oppose anyone that opposes that viewpoint, whether it's Trump is the leader or another leader comes about, someone like Robert Kennedy Jr., or any DeSantis, Governor DeSantis from Florida. Anybody that would oppose that illegal action would find my support. Just common sense.
Does it look like the push for central bank digital currencies is failing?
It seems to be a little bit. I mean, I don't believe it really is. I think the powers that be want it because they're looking for more control over our lives. And that's the whole reason for the digital currency discussion. And a part of the government is being tested. And I've read somewhere about 120 banks are secretly testing it. So it's not. It's something that the powers that be want. They want to be able to control your bank accounts, tell you in effect what you can buy and sell, or stop you from doing so by turning off your account. So it's Big Brother. It's just Animal Farm, George Orwell's Animal Farm coming to life, and this is what governments want. And you have idiots like Janet Yellen at the Treasury Department supporting it, and she's a national disgrace, by the way. Some of the comments she makes. In any event, it seems to have slowed down a little bit in terms of coverage and imminence of happening, but they want it to happen, and they've been testing it, and ultimately it will, unfortunately. As we mentioned in our previous interview about this many weeks ago, that there seems to be less opposition to it among younger people than people of my age, who are a little older and been around a little bit, because we understand the consequences, and younger generation who is so digitally oriented and crypto oriented and, computer oriented and digitally oriented that way, seem to be receptive to the idea, because it's something they can punch on their phone and move money around, and they don't think in terms of the loss of freedom aspects or the government supervision aspects of a crypto or digital currency. So are they willing to give up some of their freedoms because they like the idea of a digital asset versus having cash or having a normal bank account, checking account process? That's interesting. There seems to be less concern on their part. Unfortunately, many of the young people have been brainwashed in our educational institutions, which is a lot of the reasons we have the anti-Semitic problem in the country now. But that same brainwashing, may have indoctrinated them to believe, hey, a digital currency would be great for all of us without exposing the political risks of instituting it. So, answer is it seems to downplay a little bit, but it's not going away.
Mark, where can people find out more about your special offer?
Please go to vrtrader.com, VictorRobertTrader.com, and again, we mentioned this earlier that we do have a promo code 2022 half off. If you'd like to sign up, love to have you on board. And again, happy holidays to everyone, and be safe and happy.
Mark, thank you so much for being on our Christmas show.
Love it. Happy Happy holidays.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was speaking to us from Arizona. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Victor Adair, and Mark Leibovit. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Best of the holidays. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen.